Okay, Anisha, we'll have to come back to that. Sorry, we've got the management of Ujjivan, which is joining in. That stock is up close to about 15%. So the recently listed microfinance company has come out with a solid set of earnings. Samit Ghosh, the MD and CEO of Ujjivan, joins in now. Good morning, Mr. Ghosh, and thanks so much for joining in. FY16 is closed on a very strong growth. Your NII was up nearly 78%. Your net profits are up 134% for the full year. Now that you will be transitioning into a small finance bank, could you tell us what the NII and profit growth could look like for FY17?
Good morning. We've had a very good year, and it's a continuation of the previous year, so it's like a purple patch for us. And right now we are working on a transition to move into the small finance bank, and that's what we will be very busy with in the next 12 months.
Okay. So will the transition hurt the kind of growth rates you have historically enjoyed? Could you give us a sense of what FY17 NII and profit growth numbers could look like?
Well, I can't
even a broad range
numbers right now, but I think in terms of we will have a normal kind of growth. We are looking for next year, this financial year, about 30 to 35% growth in our revenues. At the same time, we will be working on the transition.
Okay, so about a 30 to 35% revenue growth. What about your assets under management? Would that continue at the 65% growth rate you enjoyed in FY16 because you've got more cash after the IPO?
What I meant is the AUM would probably grow between 30 to 35% this year.
Okay. What about the net interest margins at 12.3% for FY16? How is it likely to trend?
NIM, I don't think there will be too much change there. I don't think there will be major changes on the NIM. But our operating expenses, which have operating expense ratio, which is now down to about 7.5, may come up a little bit because of the heavy investments we are making now in terms of technology, infrastructure, people in our transformation to becoming a bank. So we expect our operating expense costs for a period of 2 years to go up a little bit and then come down subsequently as the bank starts, full-fledged operation.
Okay, so just to talk a little more about the increased expenses you will have to bear as you transition into a small finance bank, how much would the operating expense go up, roughly at least for the next 2 years? Would it go back to the 8.5% that you had in FY15, say, or would it even exceed that?
Yeah, possibly it would go. It would go back to about 8.5%.
Okay, so operating expenses should be around 8.5% for the next 2 years. Okay.
Right.
Since you are increasing in scale, will that add to your risk while your gross NPAs are negligible right now, just at 8 crore for at least in H2 of FY17? How do you expect the asset quality to pan out?
Yeah, see, as we grow our business, right now close to 88% of our business is in group lending, which has a very, very low NPA. And as we build our micro SME business and the housing business, the proportion will change in terms of group lending and MSME business and the housing business, and that may lead to a slight increase in our NPA because in this segment, compared to the group lending segment, it would be slightly higher, which we have already accounted for.
Okay, so it could worsen a tad bit, but it'll still be, say, below 0.5% at the gross NPA level, or what would be the upper limit that you see for the gross NPA ratios?
See, we provide 1% actually for the group lending, which is the RBI requirement, for the group loans. Regardless of what our NPA is, we make a 1% provision. And at the same time, we make a 2% provision for these individual loans which we give for micro SME and housing. So, that's the big outer limit, within which we operate.
Okay. Could you break up this, AUM growth, the normalized growth of 30 to 35% that you see into your three key segments for group lending, MSC as well as housing AUM, which is likely to drive growth?
So, like this year, our the MSME and housing business has grown almost by 100% over a very small base, So that kind of growth rate will remain in that segment, whereas the group lending will continue around around 30% or something like that.
Okay, and housing AUM, 100.
Both. I'm talking about the housing and MSME business, which doubled this year virtually together.
Okay, so that should continue, while group lending, the majority of your business should be at about 30%. All right, Mr. Ghosh, we'll leave it at that. Thank you so much for joining in, and all the best for the coming quarters. So that is Ujjivan. Remember, from its issue price of 210, that stock has seen a huge 40% rally now to levels of close to about 300 rupees now, crossing for that. So that's the management telling us that they're targeting an AUM growth of 30 to 35%. NIMs will be maintained, but in the next 2 years, as they transition to a small finance bank, the operating expense can go up from the current 7.5% up to 8.5%, but thereafter, say from FY19 onwards, the operating expense should come down. Our group lending business should grow at 30%, while the other two businesses, MSME as well as housing AUM growth, should be closer to the 100% mark. Big mover, Ujjivan. Time to slip into a very short break, but on the other side, we'll get you more on the market. Stay tuned.